Hey folks, welcome to a product review at Finominal. Today we're going to look at Federated Hermes Project and Trade Finance Fund, which trades on the ticker XPTFX. Now, what does a project and trade finance fund do? It simply offers exposure to a diversified portfolio of effectively loans related to project finance, anything export oriented. And we can look at the fact sheet of the fund, and we do see that this is currently 103 securities or loans effectively, right? We see that the average yield is 7%. We can see that the effective duration is 0.8 years, which means these are very short term. And we can also see that the main exposures from a geographical perspective are to emerging markets, Angola, Brazil, US, Egypt, Nigeria, US obviously not being EM. And from a kind of like industry composition or client financing composition, right, you can see it's energy, telecoms, and foreign governments. So this is quite interesting, right, in sense of this diversified portfolio of kind of emerging market project loans. Now, let's see how this fund has performed and what it actually offers to investors, right? And we're going to select simply T-bills as the right benchmarks because this is a fixed income product. And so let's see how this stacks up, right? So we do see that, well, since 2017, right, the fund, XPTFX, has significantly outperformed the 1 to 3 month US Treasury bill index. Having said that, we also see broadly speaking similar trends, right? And you could speculate that effectively the fund is kind of like almost like a leveraged version of T-bills. But let's investigate a little bit further. Now, so from a performance perspective, kind of interesting, right? There's not a lot of, like kind of like holdings data that we have, right? We can move straight to a factor exposure analysis. Now, running a returns-based factor exposure analysis on this fund does not reveal much. There is almost no equity exposure here. There is very little exposure to fixed income, to US dollar, to commodities, as expected, because these are very short-term contracts, right? Short-term loans, effectively, right? Less than a year of maturity. Also, no factor exposures. I think the more interesting question is to question whether this fund diversifies, and we can move to the kind of like analysis regarding that. Now, over the last, well, almost close to 9 years, we've seen the correlation to the S&P 500 was close to zero. Kind of expected from a fixed income instrument, but also the correlation to the kind of Bloomberg Barclays US Ag Index was also quite low, right? But that perhaps we can explain by the different duration profiles. So the average duration in this bond index is years, right, and not measured in months as for XPTFX. Now, in terms of quantifying the diversification benefits, here's a quick way to do this. So effectively saying, what would have happened to the Sharpe ratio of a portfolio comprised of the S&P 500 if we would have allocated 25% to XPTFX? And well, Sharpe ratio went up from 0.81 to 0.88. Stated differently, this fund would have generated diversification benefits. So on a kind of like standalone basis, that's attractive. Naturally, you can question, wouldn't kind of any short-term bond fund have, like generated similar diversification benefits? And that brings us to the second part of our analysis, which is comparing this fund to its peers. Now, we selected 3 other products. There's one mutual fund from T. Rowe Price, which is a floating rate fund. There's a floating rate ETF and an Invesco variable rate investment grade ETF, which is also basically a floating rate product. So let's compare these products from a performance perspective. And I think we do have data going back, well, 2020-ish, right? So basically right when the COVID crisis started. And overall, we do see that the project finance trade fund, right, XPTFX, is kind of right in the middle of those from a return perspective, right? The floating rate fund from T. Rowe Price has outperformed it, but also with more high volatility versus the other products, right? The product from iShares or from Vesco, right? Lower return, right? But more similar from volatility perspective. Now, on the face of it, right? If we move to Sharpe ratios, right? You could make the point that this project and trade finance fund is clearly superior. Its Sharpe ratio was 2.5 compared to, well, the highest one was the one from T. Rowe Price, 0.83. But we have to be careful that these are products that are not necessarily comparable. And that's because the XPTFX is a closed-end fund that does have a daily NAV, but it doesn't change very often. There's not a lot of trading happening. So effectively, the volatility we see over here with 1.13%, it's artificial low. As an investor, you cannot also redeem at any given time, right? Compared to these other products, volatility is higher, but you can also, at least with ETFs, redeem on a daily basis, right? And so that kind of shifts that, yes, if you look at this from a numbers perspective, we can a little bit fool ourselves in saying that this project and trade finance fund, right, has a much lower volatility but same return, therefore much higher Sharpe ratio is attractive. But like that is only due to volatility being understated. And given that it has this profile of providing exposure to these kind of EM short-term loans, we would have expected something more unique than something that kind of looks like a floating rate in like ETF or iShares. And so this kind of concludes our short product review, right, of Federated Hermes Project and Trade Finance Fund, right? It manages close to $1 billion. Its underlying exposures are kind of unique, right? But you can also question, right, isn't it again just a bet on economic growth, right? In the sense of, you expect that these contracts are fulfilled, right? And that the loans will be repaid, right? And like the fees you're paying for this, I think are significantly higher with 41 basis points compared to these other products, right, where you pay 15 basis points or 30 basis points. And for that level of fees and from a profile perspective, this doesn't seem to be particularly unique. It simply gives you, again, exposure to US interest rates. Hope that helps. Have a nice day.